John Colescott, before we name some of your favorite closed-end funds, I just want to know what's going to happen to funds that use a lot of leverage if and when the Fed finally hikes rates.
So we think closed-end fund discounts will widen a little bit. We can protect yourself with current discounts, and long-term you should be fine in most asset classes.
All right, well, let's get to the funds then. The first one that you like is the MFS High Income Municipal Trust. This is the CXE. It's trading at a discount now of about 4%. Its 3-year average is an 8% discount, so it's on the way up. Why do you think it's going to keep going up higher?
Because the average sector for all the funds are closer to par. You're only 2/3 investment grade assets, so you're able to have a lower duration, even with that leverage of about 7, which is cheap for closed-end funds. So 5.5 yield, 4 discount, better set versus most closed-end funds for a rise of rates.
All right, next is the Calamus Global Dynamic Income Fund, the CHW. This is a stock and bond fund. Why do you like it?
I like because Calamus is a solid manager in the space. You're getting 11 yield with an 11 discount. For a portfolio where the manager can change his mind through different environments, which as an investor, you want a professional doing that for you in the uncertain times we have currently.
All right, next, let's talk about pipelines, because you like the Cushing MLP Total Return Fund. This is the SRV. It's at a 13% discount, but things have been crazy in the pipeline space. They really got hammered 2 years ago, a little bit last year, but they've come back nicely.
It is. So there's about almost 30 closed-end funds in the MLP sector. We like this one best because it has that wide discount and one of the highest amounts of midstream MLPs in the portfolio, which can emotionally react to oil prices, but fundamentally don't. So with whether oil goes at 25 or 125, these funds generally will keep paying their yield.
All right, and then finally, the Saratoga Investment Corporation. This is a business development corporation. They lend money to small businesses. It's up 16% year to date. It's having a great year. What makes you think it's going to go higher?
So we got to know the fund pretty well in the last year or so. It's not that liquid, so you got to be a little patient, but still at a 20% discount. It's mostly first lien loans. It's got good shareholder provisions. They just raised the dividend, and yet I see an opportunity for it to keep going higher even with rising rates because BDCs generally have variable loans. So good management, good discount, just be careful trading.
All right, well, thanks a lot for coming on and naming your favorite funds.
Always a pleasure, Greg.
And thank you for watching The Street.